Hi guys, I hope you are well. Welcome to this session today. And I just want to say before we really crack on with all this stuff, I just want to say a massive thank you to everyone who has been supporting me in order to supply this education to you, because this is going to be game-changing information in my opinion. For you. It was for me. I believe it will be for you as well. There are certain things you're going to learn which has information which is not available, shall we say, as easily as you would think. And that is going to be something which is really going to hit home to you as well. And you've obviously seen the first module in the university, so that's I want you to treat that as if it was your warm-up, basically, towards what is now going to be the real Kickstarter towards this university program. And it's going to be delivered in a certain way in which there's going to be lessons, which is what you're obviously listening to now. There's going to be weekly commentaries, so I will give you my market analysis, my thoughts and things like that. And then there's going to be updates on basically how that weekly commentary is going. So expect at least 2 to 3 videos a week, I would say. The lessons and the weekly commentaries are there to complement each other. Okay, that's the key thing here. So if you're joining this university program and you're a few months later, you have to start with this video, but you also have to watch the weekly commentaries as well. So go back and watch them from whenever you first started. Don't try and just jump to the first one you see. And I'll be plain and obvious to you, you're not going to find... So for example, if you go to another lesson which says entries, for example, as a lesson, I don't want you to just skip everything you've learned and go straight to that lesson because you like the look of the title. If you're that person, I mean this in the nicest possible way, but it's going to be a really tough journey for you. Okay, so what you need to do is be very, very transparent with yourself and understand this is a learning process, because you have to learn this. Now, the way in which this is going to be delivered is absolutely not going to go back down to the basics. So whatever you've learned from the college program, or what was previously known as the 1 week trader program, or the Smart Forex Solutions Academy, as in the very, very basics, I'm not going to go over with you again. I'm not going to talk about an order block. I'm not going to talk about... what I mean by that is I'm not going to tell you what they are. I'm not going to explain to you the purpose of an FU candle, an institutional candle, imbalances and things like that. What the purpose of this now is to teach everything with all of that stuff combined, and add a few more things, which is basically just going to increase your level of knowledge. And there is going to be a handful of new things, which I'm going to introduce you to. There is going to be a refinement of a lot of different things as well that you may be familiar with. But I'm going to do it in a pace that allows you to not get too far ahead of yourself, because I don't want to just give you 20 different things and then you be completely scrambled. I want you to understand how the price and algorithm works, and that all you have to do after that is just puzzle a few different things together to understand what's actually going on in certain places. Because in all honesty, when you understand, and I spoke about this on the last module, when you understand that the market is just seeking 2 different things, which is areas of inefficient price action and areas of liquidity, meaning this low here, and obviously this high here, and you can obviously see the reaction there in that area of inefficient price action. Now, when you understand that the market is seeking these 2 things, the actual trading part and the rest of it that falls on top becomes very, very simple. So we just have to be very aware of our surroundings, and the more experience you grasp. So for example, when you look at a chart like this DXY chart here on the 1 week, and you notice that you're in between a sell side and a buy side, you obviously know that price isn't ideal at the moment. You'll know when to step away. You'll know when to look for something different. And that's what the university course is designed to teach you. Now, obviously, another little disclaimer before we start getting into the teaching. This is going to give you information like you've never thought was possible. It's not going to do the work for you. So there's going to be small homework tasks. And again, it doesn't matter if you're coming in late to the party on this. Put your homework, and I'm going to create a channel on the Discord. Put your homework in there, wherever the channel is, and we can all be accountable for each other. But you have to put the work in. You have to go away and do the work. If you don't do the work, if you've come here and you thought, I'm going to give all the source and it's just going to click and it's just going to happen the next day and you're going to start trading profitably the next day, you are mistaken. This is going to take a period of learning from you. So obviously what we've learned so far is going to be complemented with what you're about to learn. And the main take was, there's a couple of takes I want to put on this first lesson. And basically, I want to just talk to you today about the market and how price is actually delivered, because not a lot of people are 100% sure on how price is actually delivered, if that makes sense. Because the banks, quote unquote, and institutions, quote unquote, do not move this market. And I'm going to be a little bit more precise when I'm talking about that. Because when you think of a bank, you think of Barclays, HSBC, JP Morgan, and you go on to, and I've shown you at the start of the course, you go on to the banks and you see the volatility that is controlled. Yes, they're putting a lot of volatility into the market. Yes, there's manipulation. They can have a say with things like that. The central banks of each particular country is what's going to control the value of that currency. I'm going to say that again. The central bank of each individual country is what will control that currency, that particular currency. So I'm not talking about Barclays, Halifax, HSBC, JP Morgan. I'm talking about the Bank of England for the pound. I'm talking about the Federal Reserve for the USA, the Bank of Australia for the Aussie. If the Federal Reserve is strong, the DXY will be strong, which means these Forex pairs that have USD at the back end of their names will be weaker because it will show a stronger euro, a stronger pound, a stronger Aussie. Should you find that the USD is also strong, if USD is at the front, so for example, you've got here USD CAD, wherever it is. Well, you've got, USD JPY, USD CAD, USD CHF. You're going to get those moves following the same direction as the DXY. And we know that there's a correlation between the dollar and the rest of these Forex pairs. And it's just about understanding why the markets move the way they do and what they are actually looking for. So what we have to understand is that the algorithm is delivering price every hour, every day, every minute, every second. It's delivering price towards levels of liquidity. Okay, it's delivering price towards levels of liquidity. Now, the algorithm delivers liquidity towards sell side, which is just here. Let's write that down. And it delivers liquidity to buy side. And trading becomes very easy and simple when you understand that if the market's heading towards a certain area, you have to just trade in direction with the trend. So we've learned already now that to buy, you need to be buying low in a bullish market. And to sell, you need to be selling high in a bearish market. targeting sell side liquidity and targeting buy side liquidity. And what we have to look at now is that the charts are showing two different things on here, which is all about how we're going to navigate our way around the market. On this side here, you can see the price on the side, and on the bottom is time. So understanding that time and price is everywhere. And this is how it's going to help us with what we enter, when we enter, and why we actually enter. All this stuff you've read and seen in the past, buying pressure, selling pressure, supply, demand, is complete nonsense. The market is an algorithm that is programmed to run and deliver towards buy side liquidity and sell side liquidity. And it is doing that after rebalancing areas of inefficient price action. That is what you have to remember. That is going to be your key for this. And there's a couple of things I'm going to introduce you to, or just one particular thing I'm going to introduce you to in this lesson. Basically, now we're familiar with what's essentially going on. Okay? Because there's a few things. Now, I often talk about this website here, forexfactory.com. And when I'm speaking about this website, I want you to actually understand what I'm looking at. Because on a Sunday, before the market actually opens, you are able to frame your entire weekly schedule. So you should be able to know when you're going to enter the markets based on looking at this. So what I'm going to teach you is how the market moves, why the market moves, how to enter the market, how to know when the market's going to reverse, how to know when the market's going to continue, how to know whether we're going to hit buy side liquidity or sell side liquidity first. And all that's going to come in time. But I want you to get the absolute basics right first. And that is that we are looking at Forex Factory. Now, Forex Factory, in terms of news, is not going to determine the direction. This is why I always say, and I've always said this, I've always preached to this, if you're a trader and you're looking at this blindly and you think that trading on Friday the 8th of March with NFP is a good idea, then you're not going to get very far in the trading industry, because this is not going to help us with direction. This is going to help us with volatility in the market, and we need volatility in the market to help us frame setups and actually get paid. Because the idea is that you are here to make money. And I am going to help you make money as fast as you possibly can using these concepts. So I look at forexfactory.com for one thing and one thing only, just to look at the times I'm trying to trade. Okay, I just want to see what times I'm going to trade. So I'm looking at this here, and this was Monday the 11th, and there was no news. That means Mondays are no trading days for me. Because the market is either going to do one or two things. It's going to consolidate and do nothing and be really, really boring, or it's going to be unfruitfully volatile. So if it's unfruitfully volatile, that's unpredictable. And I'm not looking to play in a market like that. Once you start getting really, really good at this, you will understand what I mean when I say account preservation is the most important thing. Because if you've got £100,000 of your own money sitting there, you're going to make better decisions. At the moment, if you've got small accounts and you're just trying to grow aggressively, you make foolish decisions. But what you have to get into the habit of doing is making smarter decisions now and not worrying about the growth of your accounts. And I mean that simply because you can get capital anywhere. You can get capital through a prop firm. You can get capital through investments. So you can find an investor that can see how good you are as a trader and get them to invest money, and you can create a profit split with them. You can grow accounts in different ways. My job is to teach you the skill. This is not financial advice. This is education. And I'm just educating you on how to learn this skill. What you do with it then is up to you. But you have to act as if you had £100,000 of your own money in your account. That is what I want you to try and do. Now, just to kind of recap there, I don't use this to frame the direction of my entries. I use it to frame the time in when I'm going to trade. So, no trading Monday because there was no news. Tuesday, I would have been looking to trade in the New York AM session, but I'm not looking to do much because we've got this 5 p.m. news. And that basically means there's going to be more volatility, so I would expect slow movements before then. Wednesday, again, this is a New York PM session. By the way, this is UK time. But this is a New York PM session. So it's afternoon in the New York session. That's 1 o'clock New York time, I believe, or 12 o'clock New York time. So for me, at 5 p.m., I'm not really going to wait around till 5:30. So I'm going to give it half an hour after each news release has happened. I'm not really interested in trading at 5:30. For me, I like to be with my family at that time. That's dinner time for my children. So I'm not trading on Wednesday at that particular time. Thursday, 12:30. And you've got here all of this news here. And it's all arriving at this particular point. So I'm not going to trade at that point. And you can see here, this 1:30 news and things like that. That's basically the time that you see everything. I'm looking to wait about half an hour to let this volatility kick in. And then I'm looking to get involved. So Thursday the 14th of March, if I'm going to be a participant in this market, I'm going to be looking for setups probably around 1 to 1:30, which if you're in New York times, that is 8 to 8:30. My window is really from about 1:30 UK time until 4 p.m. UK time. So that would be, if you're in New York, 8 a.m. until 11 a.m. But ideally, I'm done after that first trade. And then looking at Friday as well, you've got, again, 2 key events. So I would be looking for framework to be setting up about 12:30 to 1, and then I'll be looking to enter the market about 2:30, 3-ish after this. Now, understanding what the market obviously does here. Okay, let's just imagine you've got a weekly time frame. Just like this. Now, let's say the weekly opens here. Let's say we're going to have a bullish week. Price will bring itself lower on a Monday if we're going to be bullish. Okay, that's weekly open. There. So that's your weekly open. Now, price is going to come down on a Monday and not really do a lot. Okay, what's Tuesday going to do? Tuesday's going to offer us volatility. So Tuesday might create some sort of move lower towards potentially some kind of sell side area point of interest, like that, for example. Now it will get to Wednesday, and you're probably going to see some kind of push higher. And you're going to be left with something that looks a little bit like that on a Wednesday. So we've just kind of worked out there that based on what's going on, Mondays is not going to do a lot. It's just going to flirt with opening price. Tuesday's probably going to head towards some sell side area. Tuesday and Wednesday are probably going to be in charge of creating the low of the week. And the rest of Wednesday, so if we're looking at it here, we've got today, New York session open, 12:30, which is 7:30 UK US time. Maybe that is pushing us lower. Maybe today, in the afternoon session, when there's more USD news, it will create a low of the week. Wednesday might be looking at the accumulation in the low of the week to take price higher, bringing us into Thursday. So if you've already made a low of the week and you're sitting around here and you've made a low of the week on Tuesday and Wednesday, it is fundamentally unlikely that Thursday is going to create a low of the week. So you're basically where you should be in the price. Now, that will probably look, this is going to be Monday, Tuesday, Wednesday. This is how it will be looking. Now, if you've got buy-side liquidity resting up here, maybe Thursday's news is going to push you towards that liquidity. And this is what you have to be doing. You have to be looking at the left all the time here. Because that brings us into Friday and there's more volatility. So what's Friday likely to do? Friday is likely to come back into the range, leaving a wick. So you were left with a wick that looks a bit like that. And then on Friday, that might look something like that. And that's how I'm framing everything. I'm looking for reversals at the later part of the week, even if I'm bullish or bearish. And I'm looking at lows of the week to be, or highs of the week to be created on Tuesdays and Wednesdays. And I'm looking at Monday to frame the first day. So is it going to be consolidation, which means I'm expecting manipulation the next day? Is it going to expand? What does the news look like? Reversals happen on smaller time frames. Reversals and expansions happen in and around these times. So I'm looking to get involved in the market after these times. All you have to do is understand what the weekly is looking to do. If we look at the weekly time frames here, we're on a weekly time frame. Each candle manipulates and then drops and then comes back up. Today is Tuesday. What have we done so far this week? We went lower and now we're pushing higher. So when we look at this from a smaller time frame point of view, just there, that's your weekly open. So at the moment, bearing in mind we know there's liquidity above here, this looks pretty bullish. But it's Tuesday. So are we looking to create a high of the week? Maybe in here, at that level there, that 1 hour order block, for example. And then are we actually going to finish heading towards this sell side liquidity? And then if we get below there on Thursday, and we haven't actually got any liquidity, maybe Thursday reverses and Friday reverses back into here. That's what I'm looking at. That's how I'm looking at the markets. That's going to wrap up this lesson. And I'm mindful of I don't want to talk for too long. I don't want to sit here for an hour, 2 hours. So I'm going to wrap up this lesson here, guys. And I'll do another lesson, which I'm going to talk about in the next bit. Hopefully this has been insightful. And I will speak to you guys very, very soon. Take care.